Ever wondered how global events, economic shifts directly impact industries that seem niche but are actually incredibly vital? Today, we're embarking on a deep dive into the fascinating world of Indian specialty chemicals.
Exactly.
Okay, let's unpack this. Our mission today is really to cut through the jargon of institutional equity research. We've got a recent report here from PhillipCapital dated July 7, 2025.
That's right.
And we're going to give you the essential insights on how this sector performed in Q1 FY26. That's April to June 2025. You'll find out which companies thrived, which ones maybe struggled a bit, and most importantly, why.
Right, so setting the stage, the Indian specialty chemical sector, it faced a pretty complex operating environment in Q1 FY26. Now, while the overall sector is estimated to post modest earnings growth year over year, it also saw a sharp sequential decline in earnings. This was primarily, and this is a key phrase in the report, hurt by trade challenges alongside those, subdued prices we've been seeing. But there's always a deeper story to uncover, isn't there?
Absolutely. So what exactly were these significant trade challenges and the broader economic factors impacting the whole sector in Q1? What did the report really zoom in on?
Yeah, the report highlights two primary headwinds. First, trade disruptions. These were basically caused by ongoing geopolitical tensions, uncertainties around U.S. tariffs,
Yeah.
and that led to trade deferrals.
Yep.
Shipments getting pushed back, it directly affected chemical sales growth.
Okay.
Second, subdued pricing. That was a really big factor, influenced partly by lower crude oil prices. They were down, 13% quarter on quarter,
Wow.
and 23% year on year. So
Yeah.
pretty significant. And then you add ongoing Chinese price pressure into the mix. It just kept chemical prices low.
That sounds like a really tough environment for keeping profit margins healthy.
Uh,
What about input costs? Did they offer any kind of relief at all?
Well, that's the interesting part. While input costs like benzene down 18% quarter on quarter, 29% year on year, and toluene, phenol, caprolactam, they mostly subsided. But the overall sector margins, still subdued. Even with a better product mix and those, let's say, benign input costs, it seems those persistent temporary trade challenges, the softer demand, and the weak pricing just weighed too heavily.
So it wasn't enough to offset the external pressures then?
Exactly. It really shows how much those macro factors can override internal improvement sometimes.
So what does this all mean? How do these global trends translate specifically to the Indian chemical landscape? Did India just follow the global pattern, or was there something different happening?
Well, what's fascinating here is it's a bit nuanced. So global chemical demand indicators, like the global PMI, they showed a stable but kind of subdued trend. And European chemical production, still struggling.
Right.
But both the U.S. and India registered sequentially positive chemical production trends. And importantly, Indian chemical exports momentum actually revived in Q1 FY26. It showed a 7% year-on-year growth up to May, which suggests, a notable resilience despite those global headwinds.
So some positive signs despite the gloom.
Yeah, and we even saw some leading Indian players, Navin Fluorine, Aarti Industries, Archean Chemicals, show a sequential uptrend in overall exports, which actually goes against the usual seasonal weakness you see in Q1. So something interesting is happening there.
Okay, that gives us a good feel for the macro picture. Now let's get down to the specifics. How did individual companies actually navigate this quarter? The report identified some clear top performers and one company facing pretty big challenges.
That's right. The top results picks were Vinati Organics, SRF, and Camlin Fine Sciences. On the other hand, Aarti Industries was singled out as a negative surprise for the quarter.
Okay, let's start with the positives. Who really led the pack in earnings momentum? What was driving their success?
SRF is estimated to lead, an impressive 33% year-on-year jump in PAT profit after tax.
33%, wow.
Yeah, quite something. And this strong performance, it was primarily driven by a price rise in packaging films, apparently caused by a fire at a competitor's big plant.
Ah, okay, so a bit of an external event helping them out there.
Exactly. But also, a recovery in their specialty chemicals demand, the ramp-up of new capacities they've built, and improved pricing in ref gas. Now, sales rose 5% YoY, but there was a 16% quarter-on-quarter correction. That was mainly just the seasonal nature of ref gas demand.
Got it. So capitalizing on opportunities, both external and internal. What about Vinati Organics? How did they fare?
Vinati Organics also expected to show sustained earnings momentum, about 18% YoY peg growth for them.
Still very solid.
Very solid, fueled by a 160 basis point expansion in margin, so their profitability improved on a 10% YoY sales growth. The report highlights continued strong export momentum in ATBS. That's a key product for them, up 18% YoY. And they also successfully ramped up butyl phenols and antioxidants. Their average quarterly spreads, the margin between selling price and cost, stayed stable. So good management there.
And Camlin Fine Sciences, you mentioned the report flagged a significant turnaround. What happened there?
Indeed. Camlin Fine Sciences is projected to swing from a net loss last year, about Rs $173 million, to a profit of Rs $137 million this time.
That's quite a shift.
Huge shift. It's largely attributed to a visible ramp-up in vanillin, improvements in their blends business, and, critically, the positive impact of closing their loss-making operations in Europe, the diphenol plant, and their Chinese vanillin operations.
So strategic restructuring paying off.
Absolutely. A clear case of addition by subtraction, you could say.
Okay, now shifting gears to the company that had a tougher quarter, Aarti Industries. What were the specific reasons for their negative performance? How bad was it?
Yeah, Aarti Industries is expected to, as the report puts it, surprise negatively. A substantial 67% YoY earnings decline in PAT and 44% down quarter on quarter.
Oof, that's steep.
It is. And if we connect this back to the bigger picture, the report details several specific challenges. Trade disruption caused by, well, geopolitical issues impacting trade routes. The report specifically mentions Indo-Pak war effects for Candleport, which significantly hit their MMA monomethyl aniline exports, right during what should have been its peak quarter.
Terrible timing.
It's exactly.
Yeah.
Plus, trade deferment due to those tariff uncertainties we talked about and subdued pricing, partly influenced by Chinese dumping. It all weighed heavily. Their margins are expected to correct sharply, down 410 basis points year on year. The report even notes a target price cut for Aarti, from Rs 680 down to Rs 620.
Right, reflecting those serious challenges. And finally, Atul. The report described their performance as muted. What was going on there?
Atul is forecasted to see a more modest 7% YoY rise in PAT. Not bad, but not stellar either. This was primarily due to price corrections across segments like polymers, crop protection, and colors. Plus impacted export trade because of those U.S. tariff uncertainties again.
So caught in the crosswinds.
Pretty much. Even though their epoxy segment like Lapox saw an expansion-led ramp-up, it just wasn't enough to offset the broader challenges. Specifically, their epoxy and crop care spreads softened in Q1, though P-cresol spreads did improve a bit. So a mixed bag within their own portfolio.
Okay. So pulling all these threads together then, what does this all mean for you, our curious listener, trying to get a clear picture of this pretty complex sector?
Well, this deep dive, it really reveals that the Indian specialty chemical sector in Q1 FY26 was defined by this dynamic interplay between challenging macro headwinds, those trade disruptions, subdued global demand, and then the individual company's ability to leverage internal strengths. Things like capacity expansion, better product mix, operational efficiencies. We saw companies like SRF and Vinati Organics navigate these forces effectively, even finding opportunities. While Aarti Industries faced very specific, very external challenges that really hurt its performance.
It's definitely clear that while the overall sector might paint one picture, the actual performance of individual companies can vary wildly, can it?
Absolutely. It depends so much on their unique product portfolios, their market exposure, and how they strategically respond to specific challenges or, opportunities that pop up.
So looking ahead.
Yeah, this raises an important question for the future. The report does give an outlook, and several companies still have a BUI rating, suggesting potential upside. But the nuanced insights, like Aarti's target price cut, or even SRF getting a neutral rating despite those strong earnings this quarter, it really underscores that you have to look past the surface-level numbers.
You need to grasp the specific drivers and risks for each player.
Exactly. It's never just about the big picture trend. The details matter a lot.
This was a really fascinating deep dive into the world of Indian specialty chemicals. It just shows how interconnected everything is. Global events, geopolitics, commodity prices, with how specific industries and even single companies perform.
And how crucial it is to look beyond just the headline figures, to understand why. Is it port congestion? Is it a competitor's factory fire? Or a strategic decision to close a plant? Those are the real stories behind the numbers.
For you, our curious listener, the real value isn't just in the financials, is it? It's understanding this intricate web of forces shaping a really essential industry. Maybe think about how these companies might continue to adapt their strategies, especially with all the ongoing uncertainties. How do you see that balance playing out between the global trade challenges and company-specific innovation in the quarters ahead? Something to ponder. Join us next time for another deep dive, where we'll continue to unpack your sources and uncover those hidden insights.